All right, so this is March 4th. This is obviously after the market has closed, and this is my review of and kind of a bit of an update on how I trade. But this is actually more for my benefit. But I thought I'd record this in case other people want to learn something from it. Um, so I've really been having a real think about my strategy and my approach to how I take trades. Sometimes the biggest hiccup for me is hesitating before I actually take a trade and knowing exactly how to manage the trade. I know how much I'm going to risk, but just kind of feeling, getting a sense of what it is that I ought to do when I get into a trade. So what I've done slightly different is, as you can tell, I put the zones in. Before I would just kind of have the lines, but then I decided to put the zones in. But the reasons why I took the zones out in the first place, and what I mean by that is, if you look, whoops, just correct this. If you notice, the the demand areas do not have the green boxes, as I have created one for the supply area. Normally I just use a line, but this time I decided to put the box back in, because I just had a real think about this whole idea of support, resistance, and supply and demand zones. One of the challenges I used to have in the past, and what kind of led to me removing these boxes and just putting the lines in there, was because whenever the price was inside the zone, I always found it difficult to take a trade, because the idea is that the zones are essentially where you have an imbalance, or rather where the prices are balanced, and then everything outside the zone is an imbalanced region. So you don't want to be taking trades where price is balanced. You want to be taking trades where price is imbalanced. And so whenever price is moving inside the zone, there's always a feeling that price is balanced, so therefore don't take it. But what I'm now realizing is that actually, if you really think about the whole idea of price imbalances and price, essentially, if the price is moving in the zone, then it's not balanced. And therefore, one should look to consider a trade inside the zone, and probably the zone is invalid. So a good example is, if you look at how price is just kind of moved in this area, you notice that it's just moved in without any resistance whatsoever. If we go to a very low time frame, like the 1 minute time frame, you'll actually notice that, this is where price is beginning to get balanced. Here it looks like it's finding balance, but look at what happens. We go further down. So technically this, I'm going to leave it now, but I don't know if it's invalid because I haven't checked, because price hasn't come out of it yet. Actually, yeah, it's invalid. The reason why, if we go into the larger time frame, because I put the 1 hour, so let's go 1 hour. Where are we? Did I delete it? It looks like I may have. All right, so we have 45, 2, 3, 4. All right, so let's add that in. Add time frame, intraday, 1 hour, and then let's have it let's have it for 180 days. Let's put it in its rightful place. Oh, come on. I'm pressing the wrong buttons. There we go. All right. Okay. So now if we go 1 hour, and then where did this come from? Go back in time. Here we go. So technically, this is the zone, but I don't like how high up this is relative to this candle. So I'm going to invalidate it, which kind of now makes sense now, because as I look at it, I see if it was halfway below this candle, I would take it. But because it's so high up, no. Even the 15-minute zone as well, that doesn't look valid to me. Now I'm seeing this in hindsight, obviously I could actually it is valid. It is valid because of where it is right now. It is valid. So the 15-minute zone is valid. The 1 hour zone, which is probably up here, is not valid, and it probably was this level. But anyway, so what I'm going to do, because I still think if I look at where the 15-minute is taking place, so it's between here. So we are still in an imbalance. So I'm going to put this here to here, and then what we'll do is we'll extend that to the right. So top right point, so let's extend this to the 5th, which is tomorrow. All right, so as you can see, price is in a balanced region, which is why the first time it came in here, it bounced. But what is interesting is where it bounced from. I marked this resistance support point some time ago, and I never really kind of looked back, and I'm beginning to see the reason why these support regions are very important. So because I had a look back, and if we go to say a 1 hour time frame, right, where it first bounced, used to be, I marked it here, and I think there's some pre-market data, which if we turn on show extended hours, and I'm sure, because I haven't actually done this yet, all right, so here we go. So the first time, so that was the second time. I'm going to change the color and make it, because I can't seem to. Let's just make it a smaller dash so I can see it better. So that was is that the first time it pegged it? No, it was the second time. So we'll do this one instead. Edit, small dash, and then the second. Actually, I'll leave them both, but because they're both close to each other. So if we look at the first time I plotted this, oh no, there was no pre-market data. All right, I plotted it here for some weird reason, and I plotted it a long time ago. Not entirely sure why I did, but I did. And if you look at it, it's touched it here. This was kind of the high. I think I may have plotted it because of this point. This is a high where it's touched again, and then the next time it touches it is obviously today. So that was a lucky one. All right, let's go back to the 15-minute and review what we're doing. All right, so anyway, so as you can see, price came to this imbalance, and then it rejected the zone. Oh, hang on, price is balance, yeah. All right, so so what we do, or what happens if you notice again is, so let me come back to this, the 5-minute chart, because that's really what we want to be trading on. So I put this in here just because I think it's important that we do that. Ideally, I'd prefer this if it was down here somewhere, but obviously that's not the case. And in fact, if I go back to where this zone was plotted, that's the 5 minutes. So that's the first time it came out. And then the second time, do we have one again? Here we go. This is where it was created. So as one can see, right, so the first point was here, which makes sense. All right, anyway, so coming back to today's, the idea would have been to sort of track, okay, why am I doing this recording? So that's the first thing you're probably wondering. But the reason why I'm doing this is to remind myself of how I should take trades and use these zones. Because like I said, in the past, I've always struggled. For instance, now if I see price in this area, because it's in a demand area, I kind of switch my bias to want to take it up. And I struggle with that because I'm not sure what to do, because I'm comfortable taking the trade out of the zone, but when it's in the zone, it's my mindset is such that it's in the zone, don't take the trade. until it comes out of the zone and proves the zone. But what I'm actually realizing is that, first of all, there is nothing wrong in using this as a map. And so a good example of this would have been if, say, I was following the price action. And now the question is, do I follow it on the 1 minute, or do I follow it on the 5 minute? Do I follow it on the 2 minute? One thing I can see for sure is I can see how the momentum is getting lower and it's squeezing. And also what you also notice is, actually no, I was going to say you see more buyers, but you see the momentum is reducing. On the 1 minute, it's a lot clearer. And that's what I saw. But because I didn't see an imbalance, I was looking to taking this long when this was trading. When we were trading this, I wasn't thinking of maybe I could short this. I was thinking of taking it long, because sometimes this happens and then it shoots up. But actually, in hindsight, I realized that, oh wow, we're in imbalance. So therefore, it makes sense why price would do this. And if anything, this is probably this is where things get, because I would have put my stop here and shorted it here. But really, this is why I don't like trading on this time frame, because I don't see this possibility. I prefer to trade on the 5 minute, because if, say, for instance, this happens and then price comes out here, I get stopped out. I mean, it's a small stop, based on here and here, but small, but still I would have gotten stopped out. But doing it this way, I feel so much better. But anyway, so seeing this and then seeing how price is moving, but not with such conviction as the SPY probably was at the time. Where is it? Here we go. All right, so where was it? This is where we opened. Yes, look at the SPY's very strong bar. But we're having a bit of, and in fact, if I put that on the 1 minute, not that we should be using the 1 minute. So just move this to 9:30. Here we go. Like, look at that. Really strong bars. But then this is the other conviction. We are going into a supply area. And this confirms what's happening. We're entering a supply area. And therefore, this is a valid short. So the point is to take the trade here with the stop at the top here, and then follow the price action. Now, the first thing is these zones are just they're maps. They're not actual areas where you actually have orders. The reason why this is a very big thing that I need to consider is when I consider the BA rally yesterday. So one of the reasons why I did not trade Boeing was because when at the time I had lots of supply areas, and again you can see it's doing that thing. As I said, it looks like it's chopping. It's it looks like it's not going. It's going to fall at some point. So I did not have any conviction in this trade. And then when it started to rally, I'd already missed the entry at this point. But the reason why I wasn't sure about it was because I had these zones. And I always have to decide on how I take a trade based around how the price is moving and not based on a prediction. So for instance, now, where is it? Yesterday, as price was rallying up and you could see there was increasing volume, all I needed to do was, if I saw this happening here, just taken, if this breakout had happened, just taking the trade from here, long, because you're forming demand in this area. And as you can see, when price returned to this area, it also struggled to go in even lower, because this was now a support area. So this would have been a valid long. And then the question is, what do? You just keep following the price action. So that's the next thing we're going to talk about. We go back to Snap, because I was looking at this. and looking at this region, of course, price is rallying into this region. Now, what happens? We have the price stalls, all right? And as it stalls, I noticed that, first of all, we're in a supply region. So there is a chance we may reverse. But if we reverse, I need something to tell me that, this is a reversal. And this pattern is my conviction that there's a reversal. So when this pattern happens and then I see price come out here, this is where I go short. I think this is $1 or something like that. Yeah, this is a $1 trade. I probably risk about $500. And then my target would be, ideally, because we're now below VWAP, so my target needs to be a support region. And this first support I can think of is here. So whether I would have gotten that far is another question altogether, because it is 2-to-1 at this point. But if, say, I did get here, and this is what, 1, 5, 10, 15, 20, almost 25 minutes. If I did get here, I think it would be very interesting to see. Now, what would have happened on that candle? Let's see now if we had gotten to this candle. Oh, wow. See, that's what's even so great is when it got here, look at the momentum. I know this candle would have probably shaken me out. Now, this is the other thing I was going to say. There is, you see, this is interesting. There is another thing that could have kept me in the trade, which is the trend line. Because I noticed that after the first two candles, I can keep this trend line going. When it moves away from the trend line for this long, it's always scary because you're always worried you're going to get a big pullback. But of course, you did get a pullback, but it still held. Now, I need to develop the stomach to stay in a trade when there is some momentum. I mean, look at this, for instance, now. This is why trading with a 1-minute chart is difficult, because you're seeing this, then you're seeing this, and you're at the low of day. And this is where I had my issue and why I messed up the trade. You're seeing this, but you're not seeing the consolidation. And I think this is the point, is that if you're in the trade, your stop hasn't been hit, you haven't reached your target, whatever happens between your target and here should not matter. However, when you start to feel some doubt, then take profits. Because if, say, this was my entry here and we were here already, moving up and down should not really be a problem because we are in a trade. The only time we get out is if our stop is hit, or when it comes back to this imbalance, which I doubt because we have VWAP here. It's different if it was the VWAP was here, in which case then we know that, okay, fine, this looks like it wants to go up or something. But as you can see, just waiting for this chop to go through, and then it falls, and then it comes back, and then it's doing this again, another one again, falls, comes back. I mean, you have so many pullbacks, so it's a very weak trend at this point, even the volume isn't that high. And then you're finding this, another one again, another pullback. I think by the time you would have gotten this far, you would already have a bit more conviction about how this is going, and look at the momentum. Then it starts to pull back, and at this point, you now need to watch what's going on. Here, now this is the thing, again, would I do this on a 1-minute chart? I probably will, but at this point, if you're up this, like you'd be up so much, you see this little pullback, comes back down, momentum. And I think when you see momentum like this, there is a tendency for you to want to, to kind of see how far you can go. Again, you're a valid support. I think the moment you see this and a doji, you should want to get out. But then you saw it over here, but on low volume. Yeah, high volume, low volume, which is great. High volume, low volume. Yeah. And then the volume starts to pick up as you start to go down. So that's how you manage this trade. Anyway, so the point here is that seeing this is kind of gives you the conviction that you can stay in it. So I guess the reason why I'm recording this is really just so that I can just remind myself in future that whenever I am taking trades like this in the future, just look at key support and key support and resistance areas. I mean, look at this. This was yesterday's close, and look at the momentum. It was at VWAP, and so that's obviously why this candle is so high, because this, this is yesterday's close. It broke it, so this is already a really good support. Now resistance, and that again is also good conviction. Now there's another thing that also happened. You can see you based out, formed new. You now form new supply here, because in this region, this is what happened. So what you can now do while the trade is going on is you can, let's just change this color to red and call it 5 minutes. This is 5 minutes supply. Right? So when the price comes back to this area, you can now come back down. And what I've also noticed is when it tests it twice, so you have a double top, you have an even stronger drop. So I remember when I used to do supply and demand, I wouldn't take this first trade. I would wait for this test or this test and then take it down. And it was worked quite well. And as you can see here, it's spacing out and then pop down one more time. And then now you have demand again. So this is what how I need to treat these zones. Before the day starts, plan out these regions that I want to get into, or when price comes into, and take it. So for instance, now if say this price went through this and came all the way to this area, then I now apply the same technique. Oh wow, price has gone through this zone. It's time for me to forget this zone, delete it, and let's see what happens when it gets to this zone. And then it does maybe whatever it does, and then it like breaks down, and you're like, perfect, now we're going down. The reason why that is important is because in the past, it has happened before that way, where the price went into, it actually happened with Tesla yesterday. We'll actually do Tesla. It happened with Tesla yesterday. So, this wasn't yesterday. Here we go. So the price tested a zone, which I obviously did not plot, came back down, and then it went back up the second time. And then it was this area that price dropped. Now the question is, where is that zone? If we look at it on the 15-minute, let's actually now look at this. Here we go. It wasn't this one. What's the next day? Here we go. Right. All right, perfect. Oopsie. All right, why did I? Okay, yeah, I know why. Okay, so let's go here. Let's zoom out a bit. All right, so the point was price tested a zone, right? So if we take off pre-market, and then, where is it? Here it is. All right, so price tested a zone, so you can see it here. Okay, so this was the first zone. And what actually happened was, if you plot this over here, because when I charted this, I did not chart this zone. Because I don't know why I didn't. And that's just like what I did with Snap. I didn't chart it. And I think if I had charted it, it would have helped me today. But the point is that if we had plotted this just like this, because it is a valid, it's a valid 15-minute supply zone. And just delete, oh, come on. My mouse is beginning to play up. Let's make this red. All right, so as you can see, price is coming here, and then it came to this other zone. So what we're going to do is we're going to duplicate this, move this up here, come to here, extend this here. I'm not really sure why I did not include this. I'm really not sure. Duplicate, and then extend this here, and maybe extend this to the right. I mean, there's even another zone above, but as you can see, the first zone price rejected, and then price came back in. So if we look at, it's a bit messy, my chart. I don't think I need this anymore. Actually, I'm going to talk about why I had this in there in the first place. just got a text which was spam. Okay, so let's put this on the 1 minute because that's what I was trading that with. Here we go. And as you can see, remember I took this from the open. And I'm just going to take this wedge off. It's really not relevant anymore. Remove. Yeah, it's not relevant. Remove. So as you can see, we traded it from the open. We took it up here, and now, had I known this was this zone, I would have. I mean, I did get out, but I didn't know this was the point of reversal. And then look at what happened. It went back up, and then of course this time it broke it with momentum. So there's also this not tendency, but there's this feeling that price is going to rally on this day. And of course, what happens is it cuts through the zone. At the time, I didn't know that there was zone, and of course, what did I do? I held my position, but I didn't hold it long enough. Had I known that I could have gotten out over here, I would have. But this is the point: is the fact that you can still hold a position even though it's going into a zone. Say, for instance, now, because we had demand here, I've taken it out right now, but we had a really good demand area where this was coming from. We could have taken it up through the zone and then come out when we had a sign of a reversal. Yeah, I think that would have, I probably would not even have taken this trade, or I'm not even sure, because now I think about it, if I had taken this down here and then it now reversed, probably gotten out, come back in looking for this, and then it kind of cut through and then it came here, I'd then now look to take that. So that in itself is the way we trade. We essentially use the zones as maps. We don't use them as absolute points of entry or exits. They're essentially just telling you where the price is most likely to reverse. I mean, look at this. This didn't even do what I wanted it to do. Neither did this as well, so I'm just going to remove that. This did work, and then came back down, and then look at where it reversed at yesterday's close, and then we also based out here, which is again what happened on the snap trade. So this is very valuable knowledge. The other thing again is, which kind of affected the way I treated this, was in my first recording, I actually had this as a wedge. And it was not until later on I actually had another look at this and I realized that no, it's a channel. And it was a channel that went into a supply area. And of course, that channel now got rejected and there was a reversal. I should not have plotted the wedge. It was a channel. So basically, I just need to look at the price action properly. And I think the same would have happened for Snap. So it's very important you follow the price, see what the price is doing. It's very difficult to see here. So we'll go on to a high time frame. Let's go on the 15-minute. Still very difficult to see. So you can see it's the price has sort of channeled in from here, and then it's rejected, and then somehow it's done something like this, another channel, I'm not entirely sure, and then yeah, I can see this is a bull flag. Yeah, so it's been bull flagging. So that was a bull flag there, bull flag, went up again, and then attempted to cross. So this should have been the hint. Price has come down, and then it's tried to cross, but can't cross. And the point of, yeah, yesterday's low should have been a perfect entry. Well, actually, as I think about, and then just put your stop on the high. That would have been good for a long day trade, because this is yesterday's low. And if you think about it, if this was your stop from low of day, low of day, which is 179 bucks. Yeah, you don't get 2 to 1, but at least it is still a safe trade. I still prefer to just kind of do it based on this pattern over here. All right, I don't know if there's anything else I want to, I think just in conclusion, all I just now need to do is, I don't even need to look for these patterns, is just see what the price is doing at the imbalance and then follow the price. And then just keep following the price until something changes, like here, the trend line is broken, in which case the what's it called? In which case the trend has changed, and yeah, you just basically make up your trading decisions based around the how price is moving. All right. Anyway, I'm rambling now. I hope this was helpful. For me, it's been very insightful. I'm gonna go on to other things, and then I will chart this again for Monday. Actually, I'm not going to chart for tomorrow because I'm not going to be here tomorrow. So I will chart for Monday after, but I'll watch the markets tomorrow as I travel.